All right, guys, welcome to Market Recap Live. I am your host, Joseph Martin. I have an awesome show for you guys tonight. We're going to talk about the big news with Nvidia today, the S&P 500's biggest winners and losers, and I'm going to teach you guys a little bit about the terminology and how some of the things in the stock market work. So first, I would appreciate it if you guys share the stream, hit the like button, subscribe, and the links for the Cash App and PayPal are in the ticker, which I'll put on the screen now. They're in the ticker and they're down in the description. So let's get to it. So Nvidia reported its fourth quarter fiscal 2026 year earnings today, delivering another beat and raise that was beyond the expectations of what Wall Street thought that it would be across the board. Some of the financial highlights were a revenue of $68.1 billion, up 73% year over year and 20% sequentially. Adjusted EPS, earning per share, $1.62, beating the analyst estimate of $1.50. The data center revenue hit a record of $62.3 billion, driven by massive demand for the Blackwell architecture. Gross margin reported at 75.2%, slightly ahead of the 75% forecast. Now, their outlook for the first quarter of fiscal year 2027, Nvidia provided a very bullish guidance for the upcoming quarter. Revenue guidance expected to be $78 billion, plus or minus 2%, significantly higher than the $72.5 billion analysts were modeling. The company noted that this outlook assumes zero data center compute revenue from China due to ongoing export controls. What's up? What's up? What's up? Kingpin, appreciate you for the comment. All right. So the reason why Nvidia's earnings were such a big deal today was because if they were bad, they would have brought down the stock prices of a lot of other companies with it. So this is one of the reasons why I tell you guys it's important for you to study what's going on in the market with multiple companies and politics, because they depend on one another. It's a lot of different factors that go into when stock prices go up and down. It's like the saying that a rising tide lifts all boats. So the stock market has 11 sectors in it. Okay. And those sectors are where they place companies based on, I have it over here. I don't have it on my screen. Give me 1 second so I can make sure that I explain this to you guys in full detail and I'm not just rambling. So give me a second. All right. All right. All right. There are 11 sectors in the stock market, and companies are placed in that sector that aligns the most with the goods and services that company offers. So let's look at some of the other companies in the information technology sector, because that's the one that Nvidia is inside of. So let's go over to the Thinkorswim platform. All right, so here we are on the Thinkorswim platform, and this platform is offered by Charles Schwab. So let me give you some details about this before we go any further, because I know you like, well, I don't have that, or where can I get that from, or anything like that. So I'll explain. Having a brokerage account is not the only way to trade stocks, but 99% of people who trade have one. Okay. I know that for myself, I use brokerage accounts for the convenience and the control that it gives me over my trades and my assets. So the platform that I'm using when I'm showing you guys what's going on is the Thinkorswim platform, and it's offered by Charles Schwab. And to access all of these features on this platform, you do have to open up a brokerage account. But here's the good news. It's totally free, guys. It's free. It's no fee for opening an account. It's no account minimum, and there's no monthly maintenance fee. Just go to their website, schwab.com, and you can open up an account. You can download the platform, and you can use this platform that you see me using on the screen. So I said we were going to go over to the information technology so you can see some of the other companies inside of it. So we're going to go over to the scan tab, and we're going to filter out the noise. We're just going to break it down to the S&P 500 first. So we go down to public, and we go down to this S1. So S&P 500. Then we're going to intersect. So we're going to intersect with that industry. So they're calling it industry, but it's the same, or what I was saying as far as like sectors. So the sector that Nvidia is this one, information technology. So we click that one. And then what we're going to do, we're going to click scan. I don't know why I did volume. What is that? We don't need all of this. We don't even need that one. 70 should come up. It should just, there it goes. So it's only 70 companies because I checked on this earlier. So 70 companies, we're going to put it in alphabetical order. So I just clicked over here where it says symbol, and these are the ticker symbols for the different companies in the S&P 500, specifically in the information technology sector. So you can see right here up under sector, all of these companies are all going to be information technology. So we're going to look for Nvidia. So we go down to N, there it is right there. So Nvidia. So that's the company in the S&P 500 technology in the information technology sector. And Nvidia is one of the Magnificent Seven. So if you don't know what the Magnificent Seven is, let me break that down to you right now. So let me put me on the big screen. All right. So when it comes to the Magnificent Seven, the Magnificent Seven is a nickname for a group of 7 massive, high-performing U.S. technology and consumer companies that have dominated the stock market in recent years. And those companies are Alphabet, which you probably better know as Google, Amazon, Apple, Meta, which is Facebook, Microsoft, Nvidia, and Tesla. Okay. Now, specifically when I was talking about Nvidia, the rising tide lifts all boats, the opposite is also true. So if Nvidia was to have bad earnings today, if they had struggled, the idea was because they're so massive in that sector, the other companies would have came down today too. They would have lost value and stock value because Nvidia was showing signs of struggling, but actually they didn't. They did really good today, which was what I was sharing with you at the beginning of the show. So I'm going to break this down right quick for you to see what I mean. I'm not even showing you that screen. Let me go to that right quick. Okay, here we go. So what I want to show you when we go over here to percentage change, if you look over here, it says showing 50 of 70. It shouldn't be doing that. Let's click scan. So now this is all 70 of the companies. This is the full list now. Now, when I click percentage change, these are the companies that lost today. They lost value today in the information technology sector. Based out of 70 companies, this isn't much. This is 1, 2, 3, 4, 5, 6, 7, 8, 9. I'm counting kind of fast. What's that? 1, 3. What's that, about 11? So about 11 companies out of 70, which ain't bad. So that means that the majority of the companies were green today. You see all that green. All those companies went up today in the information technology sector. So Nvidia having great earnings today helped these companies have a good day today too. And the outlook, which I explained to you, was out to like 2027. They have an idea that their business is going to continue to get stronger and have great reviews and things like that with as far as like earnings, because they're a big player in the AI sector. So like all these other companies that you can think of, like Google, Microsoft, Amazon, they use Nvidia's technology. So chat, you know what I'm talking about, AI. So AI is using this technology, and this is why they're booming like this. And more companies are bringing AI into what they're doing. So it's not just computer companies. All these companies use computers, energy companies, clothing companies, like all of these companies have some type of technology within their system, and they have to use the technology offered by this powerhouse Nvidia, along with some of these other information technology companies. So let's go into the biggest winners and losers for today when it comes to the S&P 500. So we're going to go over here to where we got Market Watch. I'm going to change this over to, we're going to go to the S&P 500, and then we're going to do the percentage change. So when we look at the top, that's Axon. So that's in the industrial sector. So they went up almost they went up 17.55% today, which is crazy. So yesterday they closed at $442.51. And today they closed at $520.18. So just to give you an idea about how much money you would have made if you had invested in them. I can't even see it. Can I drag this over? Yeah, can you see that? All right. So let's say you had invested $1,000 yesterday. You would have made, so we're going to multiply this times that 17%. So 0.1755. You would have made $175.50 in one day because of that percentage return. Now, this isn't something that happens all the time. You're not going to get 20, you're not going to get 17% overnight. This isn't something that happens all the time, but I'm just giving you an example of the power of the stock market if you catch the right opportunity at the right time. You don't want to just focus on one day, but this was a situation where that would have happened in one day. And I want to look a little deeper at this company. So I want to show you how to do that. So we're going to go over to where it says Axon. We click that. And then we're going to go over to where it says analyze. It should have changed. There it is. Axon. So the name of the company is Axon Enterprise. And right here, it gives a detail about this company in this section right here under company profile. So I'm going to read a little bit of it, and then we're going to go to their website. Now, I hope I'm pronouncing this right. I've been saying Axon. I'm thinking about the gas. I don't think it's the gas people. But let's read it. Axon Enterprise Incorporated provides public safety technology solutions in the United States and internationally. The company operates in two segments, software and sensors, and TASER. The software and sensor segment develops, manufactures, and sells integrated hardware and cloud-based software solutions that enable law enforcement to capture, store, manage, share, and analyze video and other digital evidence. So let's click on their website. And we want to see if we can find out some more details about this company. So let me bring this over. Wait a minute. So what I've learned, if you go to these websites, you can get a quick overview of what the company does and what they offer just by looking at some of the stuff that's on their website. So let's scroll down. I'm trying to see if it gives me the section at the bottom of most websites where it says about. They even have investor information on here. So here's the section you want to go to on these websites when you're looking at companies and doing research. Go down to the bottom. You're going to look for a section that says about or company, something like that. Here we go. So you got company, and then it says about Axon. I've been saying Axon. I told you I could be messing up, but you see what I'm talking about. This company right here. So we click on it. And then it should give us more details about the company in particular. So here's something where they're talking about our impact. Let's look at the numbers. We're taking on some of society's most difficult challenges. It's controversial, but we're driven by one clear goal: to protect life. The number that matters most is the estimate of lives saved. So they're giving you some numbers, some places you can visit, and things like that. So let's go back to the Thinkorswim platform. Just wanted to give you a quick idea of this company because we got another company to look at. All right, so let's go back to Market Watch. And now we're going to look at the biggest loser for today. So the biggest loser for today was GoDaddy. So GoDaddy lost 14.28%. And with them losing that much, let's do the same thing we did before when it was like if you had invested $1,000. So now what you do here, you take $1,000, you multiply that times 0.1428 and negate it. And that'll tell you how much money you would have lost overnight if you had invested in GoDaddy. So you would have lost $142 overnight. So if we do this, we add the $1,000, you'd have been left with $852.20. So the day before the previous close, GoDaddy was trading for $92.30. And then today it closed, when the market ended, they closed at this last price, $79.12. So you would have lost that 14.28% overnight, 14.28% overnight. So like I said, the positive stuff don't happen all the time. There's a possibility you could lose money as well. And that was an example of how that could happen. And then we're going to do the same thing. We're going to look at GoDaddy a little bit deeper. So let's go to, we're going to click it first, highlight it, and then go over to analyze. So now when we go over to analyze, we can see that GoDaddy is in the information technology sector, which is what we kind of went over a little bit earlier. So the official name of the company is GoDaddy Incorporated. And then we'll read a little bit of the description. GoDaddy Incorporated engages in the design and development of cloud-based products in the United States and internationally. It operates in two segments: applications and commerce, and core platform. Core. So I want to go to their website. So we're going to go to their website. Make sure I'm not signed in because I actually have a GoDaddy account. And they do have me signed in. So let me get y'all out my business before I pull this over here. All right. I'm glad I checked. All right. So I'm not signed in now. So here is the GoDaddy website. And we're going to do the same thing that I just taught you. We're going to go down to the bottom. We're going to look for somewhere where it says company or about. That says account, shopping, resources, help center, about GoDaddy. There it is right there. So about GoDaddy, you got about us. So here's the investor relations. Now that was the other thing I was trying to explain to you guys. So when you invest in these companies, you don't have to just go on to a brokerage account or something like that to look for information that the investor would want to see before they invest into the companies. They usually have a link on their website. So since we went to about on the previous company, let's see what investor relations looks like when it comes to GoDaddy. So remember how we were talking about the earnings earlier with Nvidia? So here's where they're talking about earnings with GoDaddy. So it says February 24th, 2026 at 5 p.m. Eastern Standard Time, GoDaddy Incorporated to announce fourth quarter and fiscal year 2025 financial results on Tuesday, February 24th, 2026. So this hasn't been updated because this was released yesterday. And that's probably part of the reason why the stock price went down. Either the earnings showed that the company was overvalued or they just simply had bad earnings. And sometimes that spooks investors. And these are different links. Let me click press release. Okay, so this is information that is public information you can click on and get this information and just read deep and get details about these companies. So we're not going to go into all of that. I just wanted to show you that real quick. So let's go back here. And it was a few other things I wanted to talk to you guys about. Okay. So last video, I did not do a review for the S&P 500. We talked about the winners and the losers, but I didn't really break down the S&P 500. So let's talk about that right now. So the ticker symbol is SPX. So right now, that's what we're looking at. And these are the candles. Oh, I didn't show you. Wait a minute. I'm talking to myself. Here we go. All right. So the ticker symbol is SPX. I pulled it up right here in the symbol box, SPX. So this is the S&P 500. Now, what I want to explain to you guys is you cannot invest directly into the S&P 500. I've heard a lot of people say, you just need to invest in the index. You need to invest in, you can't invest in the index. An index is a calculation. You cannot invest in the index, and I'm about to prove it. If I right click on this screen, it might take a minute to load. There we go. You see, I can't click buy or sell here. It's not even an option. You cannot buy or sell an index. The index is like a calculation where they're just showing you the health of whatever is measuring. So we're going to get into more detail about that. So here's a slide I made for you guys so we can read this together. What is an index? An index is a quick way to look at a specific group of assets to get an idea of how they are performing as a whole. All right. This is a way for you to be able to see how a group is performing as together. So instead of looking at the companies individually, like instead of looking at Nvidia by itself, we can look at the information technology sector together. That would be an example of like an index, so to speak. But you can actually invest in that sector too. But the way you do it, you have to do it through what's called an ETF, which we're not going to go into we're not going to go into today. But the way you invest in the performance of an index, because you can't invest into it directly, is through an ETF. And if you just want to know, I'll tell you the ticker symbol for the SPX for you to be able to invest in it through an ETF is SPY. So that's how you would participate in the S&P 500, by investing in the ETF SPY. Okay, now let's talk about assets, because in the previous slide, we talked about what an index was, but we didn't talk about assets. So assets would be stocks, bonds, commodities, cryptocurrency, or REITs. This is just to name a few. Now, REIT stands for Real Estate Investment Trust, if I'm not mistaken. Don't quote me, but I think that's what it is. But we're specifically focusing on stocks. We're specifically looking at stocks. So stocks is what we're looking at in the S&P 500. So now let's go to this slide about what the actual S&P 500 is as far as that index. So what is the S&P 500? The Standard & Poor's 500 is an index that tracks the performance of the 500 largest publicly traded companies in the United States. So this is a way for people to gauge the health of the top companies, the top 500 companies in the United States, without having to look at individual companies or try to do the math themselves. They can just look at this index and think to themselves, okay, the US market is doing well because the S&P 500 index is up. That's a quick way for them to be able to do it. So you might not know what a publicly traded company is. So we have a slide for that. So let's go to that. A publicly traded company is a company that is listed in the stock market where shares of that company can be bought or sold. So I wanted to make sure I broke this stuff down to where it would be as simple as I could put it, because a lot of this jargon and language that they use, it seems like they do this to make it complicated on purpose. But once you actually have a grip on what these things actually means, at least in my opinion, it tends to start making a lot more sense. So I'm looking for something else I wanted to share with you guys before I let you go. Okay, so we just talked about what a publicly traded company was. So I want to explain to you that every company is not public. So some people might not know this just because it's a big company. So I'm just going to read this from my notes. Let me just read it. So I'm going to just pull up let me minimize me and you can just listen to what I'm saying while I read this, because it's not on the prompter. Or can I put it down? No, we're not going to play with that. I want you to know and understand that all companies are not publicly traded. For example, Nike is publicly traded, but Skechers isn't. And their size doesn't matter. Just because a company is worth billions of dollars doesn't automatically mean that they're publicly traded. Some other well-known companies that are worth billions and they are private is Chick-fil-A, Subway, and X, formerly known as Twitter. Skechers used to be a publicly traded company, but they were purchased by another company and taken private in 2025. So their ticker symbol was SKX, and it's no longer active, and they were delisted from the stock market. Specifically, Skechers, ticker symbol SKX, was removed from the NYSE, which stands for the New York Stock Exchange. So they were removed once they were purchased by this other company. So all companies are not publicly traded. And just because they big don't mean that they are. Some companies you can invest in through the stock market and some companies you can't. So I wanted to make sure I shared that with you guys tonight too. Okay, I think that's enough for tonight. So this is the second night of doing this. I want you guys to stay tuned. Like I said, share the streams, subscribe to the channel, and all that other good stuff. So I'm gonna try to do this every night around 11 o'clock. So make sure you tune in. And also down in the description, I've been doing a series on whole life insurance and what most people don't know. So I want to try to share as much of this financial information as I've been learning over the years with people so they can take control of their financial situation. A lot of this stuff is just based off the fact we have no idea about this information. We just don't. Either we too busy to take the time to read the books, for example, or take a course or do the research, or we just letting things in the world distract us. We have to work on ourselves. We have to work on our families. We got to work on our spirit, and we got to work on our money. We can't be expecting somebody else to save us. So I just wanted to break this down tonight, and I'm going to continue to bring you guys this content. So take care and God bless. Oh, wait a minute. I got some stuff up here. Let me put this on the screen. I've been getting some chats. Hey man, first time here. Appreciate you. Let me pull up some of these chats. I was running my mouth and missed them. So let me pull you up. I don't know if you still here, but hey man, first time here. Media Network. I appreciate you for tuning in. Ace. Late Night Market Chill. Ace 985. Yeah, man. Awesome. Appreciate the comments, man. I'm sorry I was distracted. This is my second time doing the live stream with using this Restream account, but I appreciate you guys so much for tuning in and leaving those comments. And like I said, I'm working on it. We're going to get there and we're going to do better. And again, take care and God bless. Have a good night. Thank you guys.